wait till housing starts to tank, commercial real estate starts to tank, and stocks are pulled down even further by the real estate industry having its problems, and you'll see the central banks of the world just total panic.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for July 29th through August 5th, 2024, while supplies last. First, we feature Dealer's Choice Constitutional Silver Dimes, quarters, and half dollars at $2.50 over spot per ounce. We also have 1 ounce gold backdated Canadian maples at $65 over spot. Next, we have a limited quantity of 1 ounce silver full-color Trump Fight for America bars at $6 over spot. They come 22 a sheet and so have a minimum order of 20. And finally, we have 1 10th-ounce gold backdated American Eagles at $39 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're always glad to have this widely followed returning guest, John Rubino, the founder of dollarcollapse.com and also a Substack collaborator and creator, joins us again this Monday, August 5th, 2024. John, thanks for coming back on Liberty and Finance.
Hey, Don, again, thanks for having me back. One quick correction, though. I am founder of dollarcollapse.com. I'm sold it. Don't work on the site anymore. The guys who have it are doing a great job, but I'm not associated with it now.
Well, thank you for starting it. And I think the fact that you were prescient enough to name your site dollarcollapse.com when you started it a decade plus ago shows that you've been paying attention. You've been awake for a long time, and you also have a very balanced viewpoint on many of these topics that people who watch our channel, both our viewers and subscribers. And by the way, folks, if you're a viewer and not a subscriber, click the subscribe button and the notify, and then you won't miss a single thing. Want to know about. And John, you really have been writing a lot of intriguing articles on a regular basis. One that jumped out at me about a week ago was talking about, are we really seeing a rollover, the beginning of the end of the bull market in real estate? And I was keying in on that because many of our viewers and subscribers are later career stage or retirement age. Many of them have owned their home or maybe considering a homestead for a more sustainable living situation, and are very keen on knowing, because real estate has often been portrayed as one of the other real things. You remember from the movie Gone with the Wind, Scarlett O'Hara's father on Tara said, "Hold on to the land. It's the only thing that lasts." So that's one of the things that we talk about a lot on our channel, is owning real things rather than being victimized by the basically the financial debt-based edifice in the West, such as the collapsing dollar and the debt market, and et cetera, et cetera. So you really got my attention with your article on, is this the end of the real estate bull? And can you talk to us about the very significant and multiple factors that you've been looking at and watching that are bringing your attention to that at this time?
Well, yeah, real estate just had an epic bubble over the last 10 years. So it doesn't seem quite as frantic as the one that happened in the decade before. House prices are up more in this decade than in the previous decade, and they're less affordable than they've literally ever been. In other words, the average person can't even come close to buying the average house in the United States. Normally, that's a sign that you're at the top, and house prices have to go back down to the point that they're affordable again. And that's not happening yet, but there are signs that it's getting ready to happen, because the number of new homes and existing homes coming onto the market for sale is spiking. And in a lot of cities, it's going up dramatically. And that usually leads to falling prices, because when you have more houses for sale, it becomes a buyer's market, and sellers have to compete, and they compete by cutting prices. And then they panic when they see prices being cut, and you get a kind of a free fall in home prices for a while. That's what happened in 2008, 2009. Decent chance it happens again in the U.S. housing market right now. Now, over in commercial real estate, office buildings are such a mess. A huge number of office buildings went up in the last decade, and they were financed with incredibly cheap money. And they, at least initially, were pretty full of tenants, so they were generating enough cash to pay off their debts. Well, two things happened since then. One is interest rates have gone way up, which means the buildings that have to be refinanced have to pay way more for their new debt than they paid for their old debt. The second thing is that during the pandemic, a lot of people found out they like working from home way better than going into an office every day. So offices have lower occupancy rates now than they did and than they need really to be viable. So big office buildings are coming on the market. In a lot of cases, they're selling for a fraction of what they cost to build and what they were refinanced at and everything. So there's all kinds of losses in that sector that reside on bank balance sheets and insurance companies and pension funds and are just now being realized. So you combine a housing bust, which is probably what we're headed for, and a crisis in certain parts of the commercial real estate market, and you've got a recipe for a general slowdown in an equities bear market and the whole thing that comes with the cycle turning over. So I think real estate is it's not the only epicenter of the coming crisis, but it's one of them.
You mentioned a couple of things regarding real estate. One thing in the past that's been a phenomenon this time around is this huge surge of real estate investment trust or REITs, and BlackRock and others just buying up huge swaths. Some people have estimated 25% of all residential real estate that's being bought recently. It was by these institutional packages of buying up entire neighborhoods, et cetera, that sort of thing. That's one phenomenon. Wondering how that's going to change the behavior of the market at this time, if at all. And I guess the twin sister of that would be if the banks are getting stressed because they're the bag holders on these commercial real estate loans that are going upside down, will that just get papered over through the backdoor bailouts, by the Fed, et cetera, because it's the banks after all, and the banker's bank it always takes good care of their own. Can you talk to us about those perhaps different factors this time that maybe weren't at play as much in previous real estate bubbles?
Yeah, let's start with the whole private equity landlord thing. Private equity companies are, in the aggregate, a plague in the United States. They basically borrow incredibly cheap money because they're Wall Street entities. And then they go around and buy up entire industries and ruin them by sucking out all the money via consulting fees and scams like that. And then they just dump those companies back on the market, but they're a husk of what they previously were, and their customers aren't being taken care of. And it's a mess, especially in healthcare and places like that. But they're also doing the same thing in real estate, where they're going around buying up entire neighborhoods, converting those houses to rentals, and then using algorithms to squeeze the most out of these rental properties by doing the least possible maintenance and charging the highest possible rents. So they're not like the neighborhood guy who you see every day, who you're paying rent to, and he owns the building you live in. They're anonymous corporations run by algorithms headquartered in big cities far away. And they're, ruining parts of the housing market too. And they're going to exacerbate the crash when it comes, because the way Wall Street works is they all pile into a bubble asset when it's moving because they want to be part of this positive trend. And then when the trend rolls over, they all pile back out and they make the subsequent crash much, much worse. They're going to do that with housing pretty soon. But they're not the only ones. The people who've been building Airbnb empires by buying 10, 15, 20 apartment units or small houses and things like that, they're finding out that it's not that good of a business after all. And they're in grave danger, a lot of them, because they've borrowed a lot of money in order to build their little empires. And those empires are not paying back the kind of cash flow that are needed to cover the related debts. So you're going to see a lot of Airbnb properties be dumped on the market along with these hedge fund private equity portfolios. And that's going to make what used to be a tight market in a lot of places exactly the opposite of a tight market. There's just going to be this deluge of new inventory coming on the market, and probably very few buyers, because at today's prices, virtually nobody can buy a house. Baby boomers already have their appreciated houses, and Gen X and Gen Z and millennials don't make the kind of money that allows them to buy today's appreciated houses. So the buyers are not going to suddenly step up when house prices go down by 5%, unless the government forces mortgage rates back down pretty close to zero. And that's where we get to your second part of your question about bailouts. The stock market has been tanking the last couple of days, and you already hear calls for emergency rate cuts by the Fed. And that's on a 10% drop in the NASDAQ. But wait till housing starts to tank, commercial real estate starts to tank, and stocks are pulled down even further by the real estate industry having its problems. And you'll see the central banks of the world just total panic, and they will jump back into the market in various ways. They'll cut interest rates again. They'll start buying up financial assets, and in a lot of cases, they'll start buying up equities too. The U.S. central bank really wants to be able to buy stocks directly because that's a very quick sugar high for the market, because you've got the equities. What's that called? Income effect. Or wealth effect. I'm sorry. When your stocks go up, you feel richer and you're more likely to buy stuff, and that stimulates the economy. So if the federal government can step in and buy equities, force the prices up, they've got a really quick way to stimulate the economy. They're going to do that this time around very probably, because they're going to be very short on tools that actually work when all of these over-leveraged sectors start to break down at the same time. And what we've seen in the stock market these last few days, especially the Japanese stock market, is an interesting taste of things to come, because Japan is basically the poster child for all the financial issues we're talking about here. And they're further along than we are towards the cliff that everybody's going to go off. So what happens in Japan happens here in a year or two or three or four. And Japan right now is in a box where the yen is tanking, interest rates are going up, and if they address either of those problems, they make the other one worse. So what they tried to do just lately is protect the yen by intervening in the foreign exchange markets, and that cratered their stock market. So interest rates are starting to go back up, stocks are falling very hard, and the Japanese central bank has no idea what to do about it. It's a big economy. So even if it's just Japan that runs into this kind of trouble, that'll affect the global economy because they're the third biggest economy out there. But since everybody else is headed in the same direction, I don't think it'll be just Japan this time. And everybody in the financial hierarchy knows that. And that's why you got these calls for emergency rate cuts, because they don't want this to go any further than it's already gone. They don't want they don't want a 10% drop in the NASDAQ to turn into a 90% drop like happened in 2000 when the tech stock bubble burst. So we're going to see central banks aggressively trying to lean against the crisis in whatever form it takes. And they're going to be bailing out everybody that is very loud and scary out there. So whether it's office buildings or other kinds of commercial real estate or housing or the stock market, the bailouts are coming. And, what that does is where things get interesting. And we'll find out pretty soon.
A couple parts about that I wanted to zoom in on. One is we've been told from the mouthpieces of officialdom, people who are running our financial lives, that the economy is strong, the consumer is strong, housing is strong, renting is strong, all kinds of things are strong. Inflation is moderate, and all that. And now the emergency rate cuts. How do those two? When does the lie become so obvious that it becomes another factor that's contributing to the breakdown?
Isn't that funny? A month ago, you had all the talking heads, including like Paul Krugman from the New York Times, Nobel Prize-winning economist, saying we've got this great economy, and the only reason people don't see it as the great economy is that they're ignorant. And so 1 month later, emergency rate cuts, please, save the economy from completely imploding. So this is one more example of expert failure, because there have been a huge long list of examples of where they lie to us about some big thing, or they honestly express their opinion and it turns out to be wrong, one or the other. And then people lose faith in that sector of the expert universe, whether it's the pandemic or whether it was Iraq's weapons of mass destruction, or a lot of the political things going on now where they're kind of lying about why lawsuits are taking place. And it just goes on. And the economy is going to be the big one. When these guys spent the last year telling us we have an excellent economy and we should be grateful for the guidance that the economy's gotten from the people in charge. And that morphs into a flash crash that threatens to turn into another Great Depression, or depending on the response to it, another Weimar Germany hyperinflation. In the blink of an eye, we go from one to the other. Then we just lose even more faith in the people in charge right now. So at some point, that morphs into what the Austrian School of Economics calls crack-up boom, where people have lost faith so totally in the guys in charge that they lose faith in the money. And they dump it when they get it, and its value plunges, and the financial system breaks down. So let what's going on right now continue for just a little while longer, and we get into that territory. So fascinating times, Dunnigan, and potentially very lucrative if you play it right.
I wanted to zoom in on another aspect of what you just talked about, and that is we're talking about the Western financial world, which is all fiat based. It's all debt based. It's all heavily leveraged with a pile of derivatives that nobody even can quantify. Nobody even knows how big that is. And you're right, Japan is decades ahead of the rest of us. If you couldn't call that ahead, they're farther down this road of destruction. Their stock market has been a zombie for longer than anyone else's, et cetera. They're obvious. Painting themselves into a corner, trying to defend either their interest rates or their yen or whatever has been an obvious no-win dilemma longer than it has been for anybody else. In contrast to that, in the West, which you can throw United States and most of Europe into that same bucket. What about the BRICS plus nations that have said that they're going to be marching to a different drummer? They're going to be making it based on real things like commodities, et cetera, gold, et cetera. Are we seeing? And you've been talking about for some time now, the reducing trust horizon, losing trust and faith in our leaders and in all the institutions that have been lying to us all this time. So the BRICS plus nations seem to have been basically saying the emperor's got no clothes on now for at least a couple of years, and they're off. They've decided to just jump ship, and they're not going to play that game anymore. They're not going to play along with that charade.
Well, yeah, the BRICS countries seem to be doing the right things in terms of monetary policy and financial structure and things like that. Now, I'm not complimenting the dictatorships that are the leaders of the BRICS coalition. I'm not saying they're good guys or anything, but I am saying that they're making the correct moves when it comes to monetary policy. And a lot of that is in reaction to the U.S. We're using fiat currencies in the West as weapons against the rest of the world. So the rest of the world is responding to that by trying to set up their own monetary and financial system. And that means, replacing the IMF and the World Bank with their own organizations, and the SWIFT International Bank Settlement System with one of theirs, and possibly a trading currency that is backed by gold and that they use to balance out trade flows among themselves and bypass the dollar in that way. There's an October 10th meeting. I think it's the 10th, but it's definitely in October, of the BRICS countries. And since just this last week, the European Union seized frozen Russian assets and sent those assets to Ukraine. The BRICS countries are highly incented right now to speed up the process of de-dollarization. So it could be that we see kind of a dramatic announcement of some kind at the October meeting, and maybe it's that currency, or maybe it's that they're letting in a bunch of other countries. The last time around, they didn't come up with a new currency, but they did admit Saudi Arabia into what is essentially an anti-dollar coalition. So maybe they'll do something like that again with some other important countries. We can't know that, but suffice to say that the BRICS countries are making the right moves. They're buying lots of gold, and they're encouraging their citizens to buy gold, and they're cutting bilateral trade deals with each other that bypass the dollar, and they're talking at least about some kind of a currency that makes the whole bypassing the dollar thing official. So this is a real thing. The BRICS countries own a lot of natural resources. They account for a big part of the Earth's population, and not a majority, but a decent size chunk of global GDP. So they're important, and the more we antagonize them, we in the West, the more likely it is that they take some pretty serious steps. And it's completely possible that at some point this threatens the hegemony of the dollar, and then leads to a falling dollar and rising inflation in the U.S., which, is the last thing we need right now. But it's a complete possibility in the next few years.
You touched on recently here the fact that the major stock market indices have been stumbling this past week in the U.S. And what was called until recently the bubble of everything, or the everything bubble, where you had stocks, bonds, and real estates in a three-way bubble. And you certainly described in more detail about the real estate bubble today. Do you see the recent pullbacks in the stock market as well as what you're describing in the real estate market as the end of the everything bubble? And could this be the everything bust that people say was due to come at some point?
Well, when the everything bubble bursts, it might look a lot like the last couple of days. And I, can't know for sure. Nobody can know for sure that this is the end of this very long, very extreme bubble. But that bubble is going to burst for sure. And we'll get an equities bear market. We'll get crashing asset prices. We'll get political turmoil. All of those things will be just part of the bursting of the everything bubble. And it's eventually going to happen. There are so many different things that could be a catalyst for that. And there are so many different ways it could go that there's no way to know for sure. But, I'll tell you what, the Japanese market tanking is a pretty reasonable catalyst. And World War III, we're blundering into wars with multiple nuclear armed countries out there in the world. And, a shooting war with any of them would set off a financial crisis of epic proportions, I think. And right now in the Middle East, we're very close to something like that with Iran. In Ukraine, we're very close to something like that with Russia. And in China, we're just perennially picking a fight over there. So it's completely possible that all these financial things we're talking about end up not being the catalyst, and it ends up being some kind of a geopolitical thing. But the important thing to understand is that there's like 20 different things that can blow up this market right now. And we can't know which one it's going to be. But I think there's a safe bet that one of them causes some serious trouble in the very near future.
You've talked for years about defensive positions that people may want to take in order to insulate themselves from some of the destruction. Nobody can escape this entirely because we're all connected, and our lives are based on a lot of dependency of, we found recently in the last few years, global supply chains functioning well, et cetera, availability of scarce or rare elements and critical materials from overseas countries, et cetera, et cetera, et cetera. But for people who do want to protect themselves as much as is humanly possible from being hurt as badly as may happen during the coming volatility, what steps that have you recommended? And you've written a lot about this recently.
Oh yeah, there are lots of financial and lifestyle things that we should be doing in a world where these things that we've been talking about are in prospect now. Really strange, hard times might be coming. And one way you deal with that is, especially if it's a currency-related crisis that's coming, is you get out of the financial market, or the part of the financial market that depends on the value of fiat currencies for its value. So don't own government bonds, at least long-term government bonds. Short-term government bonds are much less risky than long-term. And be careful with bank stocks, and don't put all your money in a single local or regional bank, because bailouts are coming and bail-ins are possible. And there's no guarantee you get your money back in a timely way from a bank crisis. And, gold and silver historically have done really well in these kinds of crises, although there's a timing issue there too, because they're getting smacked as we're speaking right now, along with equities. And that has happened in the last two bear markets where stocks tank, and that pulls gold and silver down too, which in retrospect was a phenomenal buying opportunity because they were V bottoms. Those precious metals tanked, they went down, and then they bounced right back off the bottom and went on to new highs. So we could be looking at something like that again, which means keep some powder dry. Have some cash with which to buy depreciated assets if we have just a general bear market where everything goes down. Because it's completely possible there are some epic bargains created that are life-changing opportunities if you play them right. So own a fair bit of gold and silver, but be able to buy more if they tank here, because the government, when it comes in with its panic liquidity, will send gold and silver back up. If you're financially sophisticated enough to short things, in other words, to bet not on things going up, but on things going down, the last few days have been an epic opportunity to make a lot of money. If you placed a short bet, in other words, let's say you buy a put option on the NASDAQ, which means you bet that tech stocks are going to go down. You made a lot of money in the last few days. So if you want some action, that's the kind of thing that we're prepped for as a system. We're ready for the shorts to make a lot of money at some point in the not too distant future. And then as far as lifestyle goes, it's a good time to be handy, and it's a good time to acquire skills that allow you to, for instance, fix things when they break, or grow your own food, or handle a firearm if needed, things like that. If you don't already know how to do those things, it's time to kind of become a prepper. And it's time to make that list and tick that list off as you learn how to do things like that, and connect with people who can teach you more, and build a community of people who see the world the same way and are ready to deal with hard times when they come. So all of that stuff is just out there, and we should all be doing it. And potentially we protect ourselves in a lot of ways. Potentially we make a lot of money if we do the investment part of this right. So this is, in one sense, an incredibly scary world that we live in right now. And in another sense, it's a world full of opportunities. So pay attention, look at, for instance, the people who come on your show have a lot of great ideas. So they watch a show like yours and learn from the people that are there sharing their wisdom. I think there's a way to come through this in great shape and to help your friends and family. And that's what we should be looking for.
I think one of the things that we've gotten confirmation of in the last few months is that as people keep asking, when is, it's like when Noah's building the ark, when is the flood coming? Well, for people who've been preparing for some time, wondering, when is the big market crash, or when's the big collapse, or when's the breakdown of all of these structures that have been based on lies, or based on deceptions, or based on manipulations, or based on being propped up, when does it all come down? I think we're starting to see more clearly that it's not smooth sailing ahead. That we're seeing, for example, by the quote unquote leader, Japan, that there are unsolvable dilemmas that are going to be facing all of the Western countries. So it's becoming hopefully abundantly clear to those who are paying attention that the time is now, if you still have the opportunity to make preparation to do so. And John, I just have to commend also to our audience, your writing that you've done on a wide variety of topics that are very actionable, very specific, very pointed, and very helpful. So how do people get on your Substack so that they can take advantage of your writing on a weekly basis?
Well, I'm at rubino.substack.com. And like you said, most of the material there is designed to be actionable. In other words, let's take for granted we've got all these crises coming and think about what we can do about it. And it turns out there's a ton of stuff we can be doing. And so far, so good. The community that's kind of coalescing around that newsletter is very interesting.
We've been so grateful for your recurring visits here. Folks, if you don't want to miss a single episode with John Rubino or any of our other guests, make sure you're on our free mailing list by going to libertyandfinance.com. That's all spelled out, all one word, libertyandfinance.com. Just put your email address, click submit, and then confirm. On the confirming email, you'll get one email in your inbox per day with our latest interviews and our weekly specials. And as always, John, just on behalf of all of our viewers and subscribers, thanks for joining us again here on Liberty and Finance.
Thanks, Donegan. Talk to you soon.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for July 29th through August 5th, 2024, while supplies last. First, we feature Dealer's Choice Constitutional Silver Dimes, quarters, and half dollars at $2.50 over spot per ounce. We also have 1 ounce gold backdated Canadian maples at $65 over spot. Next, we have a limited quantity of 1 ounce silver full color Trump Fight for America bars at $6 over spot. They come 22 a sheet and so have a minimum order of 20. And finally, we have 1 10th ounce gold backdated American Eagles at $39 over melt per coin. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.